Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Friday, December 3rd, and happy Friday to all of you. Today's the day we've been kind of waiting for this week with the big economic news, the jobs numbers. So let's go ahead and take a look at those. The non-farm payrolls. Let me get that out there. It only went up 39,000. So a lot of the economists were projecting 155,000 or even more. Prior month was 172,000, and we only got 39,000. So that's why this is one reason why not to put too much credence onto the ADP jobs reports. This is much lower than what the ADP did. Plus, we saw the initial jobless claims coming on yesterday. So these are more relevant to what the Fed and what the traders should be looking at. Unemployment went up. A lot of people thought it would just remain steady at 9.6. It jumped up 9.8%. So that's still pretty high. Highest since I believe it was April. Was last one up at 9.8. Average hourly earnings went up slightly, up to 0.2%. Came in where the estimates were. The ISM non-manufacturing or ISM servicing went up a little bit, so that's pretty good news actually. That's the service industry showing some expansion there, growing a little bit. But factories, as you can see, it dropped quite a bit, down to negative 0.9% last October. So these are all mostly October numbers here, and obviously these are a bit disappointing for most of them are disappointing. So as you can see, the stock market's down a little bit. It's not reacting as much as it probably should be. I mean, especially after we looked at Tuesday where the rally on the ADP number came in. So it's kind of outrageous on how how the Dow was reacting to that. But then also you get these disappointing numbers on Friday, and it's not, it's not justified. So it seems kind of strange how it's kind of working. Look at the U.S. deficit panels in the news today, rejecting the reform plan. This was basically a group of Democrats and Republicans who were sitting together, the president appointed, to try to create an agreement to send over to Congress to vote on maybe restructuring the U.S. tax, federal code, and maybe the federal spending cuts, and they couldn't come up with a plan, so it got rejected. Germany is actually showing some growth for this year, forecasting that they're going to grow up to 3.6%. So that's great. So typically Europe kind of is usually ahead of the curve and kind of grows this way. So hopefully we'll see some of that growth in the U.S. here. That might be pretty positive news for us. Most of the people out there, I mean, some economists, especially from the ISM, the surveys are being out there, is that they're cautiously optimistic, and to be honest with you, that's kind of where I'm at. So I'd like to see a little bit more data and consistent data before I can get too excited about where things are going. So I do think things will get better, but right now, we are having concerns. We put all this money into the economy. We're not seeing any results in the jobs. That's where the quantitative easing 1 and 2 is supposed to help out, and we're not seeing too much results as of that. And so those are concerns. So let's go ahead and take a look at the bond market here. It's not reacting as well as I think it should. We had a jump up about quite a few basis points here. I think it was like 30 or 40 basis points. But as you can see, we're kind of going up, teetering back and forth. We should be having a rally probably close up to here than way down here. So this is kind of amazing to me that we're not having the reaction as I thought we would have. So we'll see. Maybe we'll have a better reaction later in the afternoon or early next week. So you guys have a great weekend and stay in touch.